Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special conversation. M&M Mahindra & Mahindra has come out with the numbers and a solid set of numbers yet again, and we are going to be focusing on speaking to the management to really understand the key drivers of growth this quarter and the outlook going forward. Very quickly, let me mark out for all our viewers. This time around, it's been a beat on many accounts on the analyst estimates for the company. The consolidated revenue has gone up by 25% from last year to 31,353 odd crore rupees. What we've also seen is that the net profit now stands at 2,437 crore rupees, again in line with the expectations on a year-on-year basis. This has seen a jump of nearly 20%. On the EBITDA level, we've seen an increase of 39% versus last year to 4,683 odd crore rupees, and the margins now stand at 14.9%, again an improvement over last year's 13.4%. Let's now welcome, we have with us the top management of the company. Mr. Rajesh Jejurikar joins in, the Executive Director and the CEO of Auto and Farm Sector of M&M. Warm welcome to you, sir. Thank you so much for taking the time out. I want to congratulate you for another solid set of numbers that you're coming out with, and of course ending the year on a strong note again. Do help us understand, what do you think the top three key drivers of growth for you that has sustained this growth for you, sir?
Sakshi, thanks so much and pleasure to be on the show with you for the second time this week, I guess.
Yes,
The last 1 week. So it's nice to be with you again. Uh,
absolutely.
we are delighted to put out these numbers. You quickly captured them, but if I was to reinforce, in quarter 4 we've had a 20% growth in revenue and a 20% growth in PAT,
Yeah.
both strong numbers. Few things that have enabled it, to answer your question. One is strong continued performance in our SUV portfolio.
Yeah.
The SUV portfolios continue to grow in strong double digits and has ended the year at a 20% growth. The second has been again a very strong growth on the tractor side, and it's not easy for a company or brand to grow market share when you're already plus
Yes.
40%. And we've seen strong growths through the year in our tractor portfolio. On the auto side, we've again delivered very good margins. And the real, I think, delightful performance has been the tractor margins. So, while we do report the farm margins as an overall level, we
Yes.
also, report a what we call a core tractor margin, which is
Yes.
just the domestic tractor margin along with the exports from India. And that in quarter 4 has been 20.8%, which is
Yes.
a very, very strong performance. So I would think, these three factors have added up to us being able to deliver overall strong profit numbers.
Absolutely, and pleasure is ours to have you for the second time in this week, sir. May you continue to make your presence felt on Business Today Television. And of course, you highlighted the key drivers for growth this time around. I'm going to be probably speaking about each of the segments later on, but I first want to understand on the overall margins front, sir, the key drivers that have helped you there. And what do you foresee for FY26 on the margins front? Do you have more levers to grow your margins from here on, sir? What will it, sustain the margins in a band that you could be comfortable with, sir?
Yeah. So on the tractor side, the one of the enablers I'm attributing a bit of that to the environment has been benign commodities.
Yeah.
So we've seen the benefit of that come in. Also, as the tractor market has started showing growth, from the second half of this year, we start getting some benefit out of operating leverage, which is, we've always seen in the past that when volumes start picking up, margins
Yeah.
kick in very quickly because it's a low fixed cost relative to the overall, the value chain in the business. So very quickly, a volume increase will lead to an increase in margins because fixed costs don't go up at the same rate anywhere near the way, as needed for volume growth. So that, I think, is one of the key enablers on the tractor side. On the auto side, I think one key factor has been the strengthening portfolio. We've got a strong product portfolio. The product portfolio has enabled us to take some price increases as the brands have settled in. Again, very tight control on fixed costs and all operating expenses. That I think has helped us manage the auto margins very well as well. The To your question on F26, we normally don't give a margin guidance, but I will talk a little about volumes. We do expect F26 SUV volumes, which includes the electric SUVs, to
Yes.
grow mid to high teens for the year F26. We expect the light commercial less than 3.5 ton industry to grow in high single digits. And
Okay.
we expect the tractor industry to grow also in high single digits. I think all of these will give an indication of the growth opportunity that is there. We go into F26 with a reasonable amount of optimism. On the margin specifically, while we don't give a guidance, I think it's important to see that we already are, the best margins amongst our peers in both the segments in which we play. I think that's a very good position to be in.
Absolutely, sir. Sir, do help us understand on the overall consumer sentiment and the demand. You highlighted in your press conference also that there is, a dampener that you're still seeing in the urban areas. I want to know what are the factors that are going to be dependent on to see an improvement in the urban center when it comes to the consumer sentiment there, and how would you really look at the demand scenario play out for the rest of FY26?
Yeah. Firstly, just to clarify the point on the urban sentiment, we haven't seen the effect of that on our product portfolio because, our product portfolio has been doing as well in urban areas as in rural. The comment was more by way of what the rest of industry has been experiencing. That
Okay.
being said, I think there are many enablers which we believe will help urban demand get stronger. One of the key enablers is going to be the reduction in income tax rates that starts kicking in from April. The second, I think, will be as interest rates are coming down, it's going to improve cash flow, money flow in the economy, also bring down cost of interest on vehicle purchase. So I think that will be an enabler too. Third, there was, a kind of impact on stock market, which affects customer sentiment in between. But we've seen that come back very strongly in the last few days as the uncertainty on globalization and tariffs and all of that has kind of settled in a little bit, and there's a much greater sentiment or positive sentiment than there was earlier. I think all these three factors will help urban demand. Government spending is going up, especially infrastructure in multiple areas, both urban and rural, and we think that will play out its role as well in enabling demand growth.
Okay, got that. Now, sir, do help us understand on the EV portfolio, sir. Where do you really see yourself, say, next 2 to 3 years odd when it comes to how much of your revenues will be driven from the EV portfolio, sir?
Yeah, we haven't put out an EV specific revenue number, Sakshi, but what we have said is that we expect by 2027, the year 2027, 20 to 30% of our SUV volumes will be electric.
Okay.
So that's the direction that we are working towards. We are seeing some very positive enablers with the launch of our products, and starting deliveries in the month of March. We've so far delivered 6,300 electric SUVs. Very positive response from customers. People getting a really good range as long as they're driving at reasonable speeds. If you drive the product in a city cycle, and maybe if you're on a highway between 90 to 100 kilometers per hour kind of speeds, people are comfortably getting in a city cycle 500 kilometers range, which is really good. And if you in a city cycle are driving getting a range of 500 kilometers, most people don't need to charge more than once a week, and that takes charging anxiety away. We're getting very positive feedback from customers on the overall quality of the experience, which is the ride quality, the noise levels, the tech features that we offer, and of course the range, which is proving to be a real positive enabler.
Okay. Sir, do also help us understand with your recent acquisition of SML. Now you would be also looking at the portfolio transition on the EV front from there as well. Can I ask you on the margin front, sir, how would you see the total margins as will be evolving, and how much time will that take, sir, to really reflect what's on board once your synergies are completed?
Yeah, so SML Isuzu is a profit earning company. It's a listed company, and the numbers are out in public domain. So and it will stay a separate company, so the numbers will be available for everyone to see. Uh, it is accretive. It will be accretive in the segment because
Okay.
we've just right now our trucks and buses business has got to an EBITDA break even
Hmm.
at the moment, but we still are not making a bottom line profit.
Yes.
So
Yes.
add the two, it actually improves the segmental performance. Of course, the effect of that on weighted margin for the entire business is something that we still have to complete the acquisition. The closing has to be done, and that's something we'll talk about post July once the closing is done.
Okay, fair point. Sir, on your international business, I just wanted to get a sense of how are you looking at the change in policies in the US, and of course, there is some kind of an indication there could be a softer stance on tariffs, but does that impact you in any fashion, sir?
Yeah, so we don't export any auto products to the US, so there's no direct impact of exports to the US for us. As an industry, not many Indian OEMs are exporting auto products to the US. There is auto component business, and they may have some impact. So at this point of time, we don't have a very direct implication of tariffs that may get imposed in the US on auto products.
Okay. So we did also come to know from your press conference about the huge cash that you have on your books at this point in time. Of course, the acquisition that you've just announced is something that you've recently announced. But how would you be really looking to deploy the cash on your books, which is very, very comfortable at this point in time? Would you be looking at more organic, inorganic opportunities? And which areas would you look to expand in now, sir?
Yeah, so the slide that Dr. Anisha showed as a part of his presentation listed what we were calling emerging growth gems, which are businesses which have an opportunity to significantly grow on important metrics, be it valuation or key metrics in that respective business. So some of them may need additional funding. We would do inorganic only in areas which are relevant, well thought through, and will definitely add to the overall strategic growth prospects. I don't think we are going to use our cash just because we have it without a well thought through inorganic strategy. And we spoke about this earlier. I think SML Isuzu really ticked all those boxes of
Yes.
being a good price to buy at, very strategic, helps us strengthen a core business we are in, and will be overall, give us growth opportunities in the long term. And hence, with the acquisition of SML Isuzu, for example, you now see our trucks and buses business come into being a growth gem.
Okay. Sir, just wanted to also get a sense on the inventory status as of now, especially on your most popular and the recently launched models, Thar Rocks, for instance, XUV700. How is the inventory? Is it coming down at this point in time, and the waiting period as well?
Yeah, so the firstly at an overall level, the average inventory on our auto products is well under control. We've been getting very good offtakes on our products, and it's less than 30 days for the average portfolio. The Thar rocks in particular still does have a waiting period of a few months because the demand is much higher than what we are able to supply. We have ramped up our supply, and in the month of April, we sold a total Thar portfolio of more than 10,000 units. That's the three-door plus five-door together, crossing 10,000 for the first time.
Okay, got that. Well, thank you so much, sir, for speaking to us on Business Today Television and detailing for us the outlook going forward from here and what's worked for you. I wish you all the very best for the upcoming quarters and see you around very soon on the next quarterly, sir.
Thanks so much, Sakshi. Lovely being with you.
Thank you, sir. The pleasure is all ours. Thank you so much, viewers, for tuning in onto this special chat. I hope this has given you enough and more clarity as to how M&M, one of the top automakers in the country, are performing on the quarterly results and what's the outlook going forward, the things that are working well for them, recent acquisitions, the company is confident of building up their EV portfolio, continuing to sustain their market share and probably add on to that as well. So stay tuned. We'll continue to get you such fascinating insights from the world of earnings and, of course, on markets too.
If you like the video, do like, comment, share and subscribe.